Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, y'all. Ira Epstein of Linn & Associates with your financial market update for this Tuesday, the 26th of September, 2017. The time getting on about 5:12 p.m. Central Daylight Time, which means all the trades behind me are for Wednesday's trade session. Remember, at 5 o'clock p.m. Central Daylight Time, the markets switch gears. Now, events today were interesting. Obamacare repeal, replace, finished, finito, done before the budget. That doesn't mean it can't come back at you in a more bipartisan bill down the road. It could be a year from now. Who knows when it'll be. What I think the Republicans are going to immediately do, and this is what they should have done in my opinion, they're going to go right to tax reform. And you're going to hear tax reform, and as the president's trying to do, he's trying to get others on top of it. You'll hear stories about, oh, they don't want the rich to get any tax breaks. You do understand that the rich are the ones that have paid the higher taxes recently. It went from 28%. Martin Feldstein was talking about this on CNBC, I believe it was today, or Bloomberg, I forgot which. From 28 to 40% roughly, and now they're trying to drop it back, and they're going to give the middle class a big tax break. It's hard for everybody to vote against taxes. So it is something the president might get done, and the question is, how's this market going to respond to it? Because the Republicans have lost again. The president has lost again in terms of Obamacare. That is done. When we take a look at the Dow Jones, the weekly area chart of closes, well, let's assume you come in right now at 2248. That's still an all-time high. So the weekly chart is still very much bullish. Yes, the market went on a break low from 21,722 to 22,376, and it's correcting a bit. It's back down off those highs now, what, 90 points roughly? Okay, it's a good-sized correction. You can see how the market's got distribution, as I call it, going on here. And yes, that's what I term it, distribution now. And the problem for the market is you've got lower highs, lower lows. It is in a downtrend in the Dow. In addition to that, it's still over the 18-day average, which means I have two elements here. I've got the trend down, but I have the bias up. I consider when prices close over the 18-day average, over it, it's a bullish bias. Under it, a bearish bias. The neutral point is the 18-day average itself. When I look at the Bollinger Bands, they are an algorithm designed to keep the market trading within it, and they offer resistance and support. Think of it that way. At least that's how I teach it. Therefore, they're pretty far away. You'd have to go up 200 and some odd points to get to it. I don't think they're in play at this point. I look at momentum. Momentum is still embedded. When the red line closes under 80, I will then say the market's lost its upside momentum. Other than that, it's a pullback, and the question is what to do with it. I don't have an answer for you. Because the swing line's down, the trend is down. The bias is up. This is the ruling force, and this is where it's at already with the reopening of the market. You have a little different story going on in the mini S&P. You are flirting, I use the word flirting, with losing that reading. So we already know at this day's low so far, remember I'm in Wednesday's trade, at 24.9450 you're losing that reading. Drop even further and it gets harder to get that reading back. So this will scare off some traders, and they may elect to come out intraday and see where the dust settles or come back in later in the day. It's what I call the stochasticitis traders. They watch this like a hawk, and there's plenty of them. In the NASDAQ, you've had downside momentum that is sort of flattening out. You can see that. And that's because it hit the Bollinger Band. What's so important about that? Markets trade 95% of the time within Bollinger Bands. Did everybody also forget that what's one of the weakest months of the year historically in stocks? September. Seeing a break here is not surprising. We all know that Apple, Facebook, all the problems we've seen with all this, even Google did a spinoff today or said they're going to in Europe because of a series of fines. So the FANG stocks have been taking a lot of the heat, and they're taking this market down. That's why the chart looks a little different than the others. And yet the Russell, the small caps, they're on fire. They're moving to the upside. Bullish as can be stochastic reading, They just don't change. We then get to the VIX, and yes, this version of the charting software has it all fixed, and you've got a higher high and a lower low. You are not trending. You have an embedded reading that is bearish. Both the numbers that make up stochastic are under 20, and the market is trying to get one of those numbers back up. We'll see what happens when it reopens. But as long as it stays embedded, there's still the bias down. There's no trend, but you have bearish bias also because the close was under the 18-day average. In TLT, momentum is turning up. Now, we keep hearing that the Fed is going to raise interest rates. Well, this drops like the futures, and when it goes up, it means you're not really dropping that much. So keep your eye on that. The futures market's an inversion market. If you go up, it means rates are falling. If you go down, rates are going up. That is the way to look at it. This market had an embedded reading, and look what's suddenly happening here. This market, there are both numbers under 20, both numbers under 20, and all of a sudden, this was the close Monday, here's your Tuesday close, and you're even getting further this way. This market is saying prices are probably headed back to the 18-day average for regrouping. That's how I'm viewing that. It's now just an oversold market. Dangerous to get short oversold markets. In the December 10-year notes, it's not doing what the bonds are. It's kept its embedded reading. Lower highs, lower lows. You tell me the number you see being supported. I say it's the 100-day average of closes, and this market has spent a lot of time getting down there. Excuse me. In the dollar index, the market is still not reopened yet, so how it finished today was at the top part of the Bollinger Band. Now, Bollinger Bands are an algorithm designed to keep the market trading within them. But in order to get a trend going after they've gone prices sideways and the band sideways, you have to either get overbought and bust out to the top side or oversold to the downside. This market's like in a pipe, and prices are like a spring winding. It's now at the top part. Does it follow through or does it fail? If you look up here, you tried at this area to bust through, you didn't do it. You tried to keep it under the Bollinger Band, you came back. This is a market searching for direction right now. It's a flip-flop in the euro, but it's breaking out to the downside. The question is, can it keep doing it? It is oversold at a lower Bollinger Band. If you sell a lower Bollinger Band, the odds are against you 95% of the time, because if you sell the number, the odds are the market will settle within the bands 95% of the time. So what I teach, I can't say it's smart, but what I teach is, no, you don't sell Bollinger Bands. That's where shorts take money off the table. They're trying to sell the bounces in the market. In the Aussie dollar, you still have the trend down. You're running the lower Bollinger Band in an oversold condition. The big question is the dollar breaking out to the upside now for real, and these other currencies going to go into downtrends against it because the Fed is threatening 6 rate hikes? That's something you got to ask yourself. The yen is feeling the pressure too. Lower highs, lower lows, embedded reading. Here it's down again tonight, another 9.5. Still looking on the bear side. Crude oil, it's done a heck of a job on the upside. You're at the $52 mark at the upper Bollinger Band with an embedded reading. Is the market going to be able to extend it? That's going to be the question. But there's nothing bearish on this chart. Gasoline, it's ahead of itself because it got over the upper Bollinger Band, and now you have to keep your eye here. You're starting to flirt with losing the embedded reading. If you lose it, the odds are going to favor that you're going back to the red line to regroup. That doesn't mean you have to stop there, but that's often what takes place. Nat gas in a downtrend that is oversold, and the question is, now that you're oversold and nowhere near sideways action, do you really want to get short that market? That's up to you. Nobody can tell you it's not going further down, but the key is to not take out 304.90. If you do, you lose the downtrend. Part of what I teach, I also make available in video series in brief ways. And I've created 2 videos on what's called pivot points. One of them teaches you how to do the formula, and by the way, just about every charting service of merit has this in there. It's already done for you, but it's always nice to know how the formulas come about. But then I've also created for you videos on how to apply them and how to use them on charts. And let me explain what it is. What you're looking for is a median point based on yesterday's range. From that median point, what you're going to get via the formula is a series of 2 resistance points above the median and 2 below it. That's how I want you to think of this. It'll look like this. The median's right here. You get resistance 1, resistance 2. Buy 1, buy 2. What the guys are trying to do, the traders, is they're trying to get short against one of the resistance points and get out at the median, or long at support points and out at the median. It's more than that, but I'm giving you the gist. That's all that I'm saying. If you'd like to learn this, and I think you should, we make it available. And what we have is a whole series for you called Pivot Points. How do you get it? You give us a call at 866-973-2077. You can go to our website at www.iraepstein.com. Remember what you're going to get. You can choose when you go there for whatever you'd want. You're going to get these video links sent to you in an email. Away you go with it. And I'm going to be holding seminars starting, well, not seminars, webinars, talking about a lot of this coming up now in October. So I'm getting ready to buckle in, if you will, and start a whole series of events for you. You can also click up here, and if you do it up there, you'll see if you're on YouTube, you'll get the forum page come up, and underneath it says, click here for Ira's free offers. Take care of it that way. So I'm Ira Epstein. Why not take advantage of it? It's free, and it's something I'm trying to teach you. You have a good day.